Hello traders, in this video we are going to learn how to trade previous days high and then previous days low. Okay, so there is a simple ICT liquidity trading strategy. Now you can also apply it for previous week high and low, and also previous month high and low. But in this video I'm going to focus on previous days high and low. So liquidity rests above previous day high and then previous days low. Okay, so in this video I'll be using the 30 minutes time frame for confirmation entry. When it comes to this particular strategy on synthetics, I find the 30 minutes confirmation entry to be more reliable. Okay, you can also use the 15 minutes, but as I said, the 30 minutes and then the 1 hour would be more reliable. Okay, so just make sure you turn the daily division lines so that you can easily mark our previous days high and low. Okay, so session breaks, you turn it on. If you're on MT5, it will be on already. On trading view, you have to turn this on so that we get the divisions for each day. Okay, so this particular day we had a beautiful setup forming with previous days high. So where is previous days high? Previous days high is right here. We extend it through for today. You can see that price swept previous days high. Okay, so we are on a 30 minutes time frame and we will be waiting for a 30 minutes market structure shift, and ideally we want to see a fair value gap and a breaker block. Okay, so you can see that price broke this swing low. Okay, right there you can see that we broke that swing low. So you can use a fair value gap, a breaker block, anything that exists within price. You can use the Fibonacci to take your entry as well. Okay, if you get pullback to 50%, which it did, let me use this. 50% pullback, you can take your trade. If you don't want to worry your head with which level should I trade from or enter from, just use the Fibonacci. Make sure you get a 50% pullback and that's your entry. Okay, but personally I like to go with the breaker blocks. Okay, so for instance, I like this kind of level. So as soon as price retests that level, I will be taking my entry. And if by any chance price pulls all the way back to this fair value gap, I will add another entry. Okay, so personally I would have entered from here and placed stop loss above that level and catch this beautiful trade. Okay, you target 1:2, you get your profit and you are out. Okay, always target 1:2. So this was a beautiful trade that happened today with previous days high and low. Okay, let's get here. Here there was another setup that formed. So this was previous days low. Okay, you can see that price swept that low and previous days high is right here. So even with the previous day high, there was a setup that formed. Okay, let's zoom it. You can see this high was the last high of yesterday, that day, that previous day, and then this current day swept that high and broke down. Like I said, I like to enter from breaker blocks. So as soon as price closed below this bullish order block, it becomes a breaker. That's where I would have sold from. Okay, stop loss above the high and our target ×2 of whatever I am risking. Boom. Now the same thing, when price came to the previous day's low, a setup was given. Okay, can see market structure shift here, and this particular setup, they didn't provide a pullback to the breaker block or the fair value gaps. It just kept on pushing up. After the confirmation, we didn't get any pullback for entry. But yeah, a bearish setup was offered here and a bullish setup was offered here. So this is how you can trade previous days high and low. You are not always going to get a setup. Sometimes you take previous days low and price still continues to push through. Okay. But sometimes immediately after taking previous day high, you're going to get a setup. Here a setup was provided. This was previous day's high. You can see we swept it through. Here we had initial bearish confirmation that it didn't work. So let's say after this market structure shift, you sold from the fair value, the order block here, you would have been stopped out, but you don't give up on the setup. You continue to watch to see if they reconfirm bearish. And then yeah, they reconfirm bearish by breaking below here. And like I said, I like to go with the breaker for entry. So this breaker block would have been my entry right there. So right there, stop loss above this high and our target ×2. And that would have been a beautiful trade. Okay. That would have been a beautiful trade. So you can trade previous days highs and low. It's a very, very simple trading style. Look at this setup that was formed here. So this was a previous day high that was swept here. Okay, that was swept there. After the sweep, did it get confirmation? Yes. You can see we broke below this low. Unfortunately, price didn't pull back to give us entry. If price would have pulled back to this fair value gap, that would have been a beautiful entry. If price would have pulled back to the breaker, that would have also been a beautiful entry, but price didn't pull back and it ran away. Okay. Sometimes you're going to miss the entry and you shouldn't beat yourself up. But like I said, the easiest entry is the breaker, because sometimes price will just tip itself into the breaker and then run away. So yeah, wait patiently for the previous day or high to be liquidated, and you want to see immediate reaction, okay, with a break of structure. We don't want an instance where we take use this. Let's say this is previous day's low. We don't want an instance where we take previous day's low, price continues to break down before break of structure. No, that's not what we want. We want immediate effect. Okay, so like that. So as soon as price breaks previous day's low, we want to see immediate reaction that follows with a break of structure. That will tell us that there is actually liquidation of that low. We don't want it to be broken and price to still be trading down before later on the break of structure. No, okay. You can see all these examples. There were immediate reaction, immediate effect with a break of structure. Okay. The same thing here. Immediate first break of structure obviously didn't work, but follow with another break of structure. Beautiful entry. So yeah, this one immediate effect. Here, immediate effect. So yeah, that's how you can trade previous day highs and low. Here, another beautiful setup is here. Previous day high, you can see liquidated through here. And yeah, your break of structure, your breaker entry, and there you go. Okay, this is VIS 25. Let's look for any other synthetic. Let's say VIS 75 and find one more example, and I'll end it. So here we took previous day's low, no confirmation. Here took previous day's low, no confirmation. Took previous day high, price continues to blast through. So like I said, we want immediate effect. Okay, immediate effect. So let's see. Here price continues to blast through the lows. Okay, so here there is a setup here. So previous day high right here was taken, followed with a market structure shift, like immediate effect, and then a breaker block for entry. Okay, right there. We target ×2, and that's all. Stop loss above this high. We target ×2, and that's it. Very easy way to trade. go and backtest, and you can trade this strategy alone and make money with proper risk management. All the best, guys.